Remember my friend Sarah? Last month, she snagged an incredible mortgage rate on her dream home. I was floored. Her secret? Careful planning and smart financial moves. She was over the moon, and I knew I had to share her story. See, Sarah wasn't always a mortgage whiz. She thought getting a good rate was all about luck or timing. But as she dug deeper, she realized it was about understanding the system and playing your cards right. It's like learning a new dance. It seems daunting at first, but with practice, you get the hang of it. This got me thinking. Everyone deserves a shot at a fantastic mortgage rate. That's why I'm here to break it down, step by step. We'll demystify the world of mortgages and empower you to make savvy decisions. Think of me as your guide on this exciting journey. Together, we'll explore the ins and outs of mortgage rates, learn how to boost your financial profile, and equip you with the knowledge to secure the best possible deal. Ready to dive in? Let's go! Mortgage rates can seem like a mystery, fluctuating with the whims of the market. But fear not, dear reader, there's logic behind the numbers. Several key factors influence these rates, and understanding them is your first step towards mortgage mastery. One major player is the overall economic climate. When the economy is booming, rates tend to rise. Conversely, when things slow down, rates may follow suit. Think of it like a seesaw. One side goes up, the other goes down. It's all interconnected. Then there's inflation, the rate at which prices increase over time. High inflation often pushes mortgage rates higher, as lenders try to maintain the value of their loans. It's like trying to stay ahead of a wave. You need to anticipate and adjust. But here's the good news. You have more control than you think. By understanding these factors, you can anticipate market trends and time your mortgage application strategically. It's like checking the weather forecast before heading out. A little preparation goes a long way. Now let's talk about you, the borrower. Lenders assess your financial health to determine the interest rate you qualify for. Think of it like building a strong credit score. The better your financial habits, the more favorable your rates. First impressions matter, especially when it comes to your credit score. It's a numerical representation of your creditworthiness, reflecting your history of borrowing and repaying debts. A higher score signals to lenders that you're a responsible borrower, increasing your chances of securing a lower rate. Next up, your debt-to-income ratio, DTI, takes center stage. This metric compares your monthly debt payments to your gross monthly income. A lower DTI indicates you have more financial breathing room, making you a less risky borrower in the eyes of lenders. But here's the empowering part. You can actively improve these factors. Paying your bills on time, reducing your debt load, and maintaining a stable income can significantly boost your borrower profile. Remember, small changes can lead to big rewards in the world of mortgages. When it comes to mortgages, it's tempting to fixate on the interest rate alone. But hold on, just like choosing a car, you wouldn't focus solely on the price tag, would you? You'd consider the features, mileage, and overall value. Similarly, comparing mortgage terms is crucial. Don't let the allure of a low rate blind you to other important aspects. Remember, it's about the bigger picture, the total cost of your loan over time. Consider the loan term, the length of time you have to repay the mortgage. While a shorter term might come with a higher monthly payment, you'll pay less interest overall. On the other hand, a longer term might offer lower monthly payments, but result in higher total interest paid. It's a balancing act. Then there are closing costs, those pesky fees associated with finalizing your mortgage. These can vary significantly among lenders, so don't be afraid to negotiate or shop around for the best deal. Remember, knowledge is power. Remember, my dear readers, falling into the trap of focusing solely on one aspect of a mortgage, like the interest rate, is like trying to appreciate a symphony while only listening to the violins. You'll miss the richness and depth of the entire composition. Imagine this. You're so focused on snagging the lowest rate possible that you overlook a lender with exorbitant closing costs. Suddenly, that amazing deal loses its luster, doesn't it? It's like finding out that designer dress you snagged on sale needs expensive alterations. Or, let's say you fixate on a short loan term to minimize interest payments, but the resulting monthly payments strain your budget to the point of discomfort. It's like cramming for a test. You might pass, but at what cost? Just like a mosaic, a mortgage is made up of numerous pieces, each contributing to the overall picture. Only by considering all these facets, interest rates, terms, fees, and your financial situation, can you make a truly informed and advantageous decision. Now let's demystify some common mortgage terms. Understanding these will equip you to navigate the world of mortgages with confidence. Knowledge, after all, is your strongest armor in this arena. First up, we have fixed-rate mortgages. These are like steady anchors in a sea of financial uncertainty. With a fixed-rate mortgage, your interest rate remains constant throughout the life of the loan, providing predictable monthly payments. Then there are adjustable-rate mortgages, ARMs. Think of these as roller coasters, exciting but with an element of unpredictability. ARMs offer a lower introductory rate, but this rate can fluctuate after a set period, leading to potential increases in your monthly payments. Another important term is points. These are upfront fees paid at closing in exchange for a lower interest rate. It's like paying a premium for a better seat on an airplane. You're investing upfront for long-term savings. Understanding these terms and their implications empowers you to choose a mortgage that aligns with your financial goals and risk tolerance. Remember, it's about finding the right fit for your unique circumstances. As we near the end of our journey, I want to leave you with a roadmap, a clear path towards securing the best possible mortgage rate. Think of these as your trusty tools to navigate this exciting, albeit sometimes daunting, process. Firstly, start early. Don't wait until the last minute to start thinking about your mortgage. Begin by reviewing your credit report, addressing any errors, and working towards improving your score. Remember, preparation is key. Next, shop around and compare offers from multiple lenders. Don't be afraid to negotiate. Just like haggling at a flea market, you might be surprised at the concessions lenders are willing to make to earn your business. Don't hesitate to ask questions. If something is unclear, don't be afraid to seek clarification from your lender or a trusted financial advisor. Remember, there's no such thing as a silly question when it comes to something as important as your mortgage. Lastly, and most importantly, trust your gut. If a deal seems too good to be true, it probably is. Take your time, weigh your options carefully, and choose a mortgage that feels right for you. After all, it's your financial future at stake. Congratulations, my friend. You've reached the end of our mortgage journey. You're now armed with the knowledge and tools to navigate this complex world with confidence. Remember, securing a great mortgage rate is not about luck, but about informed decision-making. As you embark on this exciting chapter of homeownership, remember that you are in control. By understanding the factors that influence mortgage rates, boosting your borrower profile, and shopping smart, you can position yourself for success. Just like my friend Sarah, who snagged that incredible mortgage rate, you too can achieve your dream of homeownership on your terms. So go forth, be proactive, and seize the day. Your dream home awaits, and I'll be cheering you on every step of the way. If you found this guide helpful, don't forget to like and subscribe for more tips on navigating the world of mortgages and homeownership.